Stop right now. If you're long Bitcoin right now chasing that 1 hour bounce, you are walking straight into the most obvious bear trap we've seen all month. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. No guesswork, no fluff, just the exact numbers institutional traders are watching right now. This isn't some vague prediction. This is the same data I use to trade my own account, and it's worked through every single market cycle we've seen over the past 15 years. Right now, this session is a clear fade setup. That 1 hour strong buy signal you're seeing? It's nothing more than a dead cat bounce in a longer-term downtrend, and our session bias is to fade that rally, not chase it. There is one single invalidation level that flips this entire bias overnight, and you need to write this down right now. Write this number down. If we break 74,140 today, the entire structure resets. If we clear that resistance level with a 4-hour close, that means the sellers have been exhausted, and we could be looking at a real reversal higher. But right now, the herd is all positioned the exact wrong way. 90% of retail traders on the major platforms are opening long positions right now, buying this tiny bounce, thinking we've hit the bottom. They see that 1 hour RSI turning up, they see that small MACD cross, and they're jumping in head first. But what they don't see is that institutional traders are using this exact bounce to offload their positions at better prices. That's why we are seeing those ETF outflows continue day after day. The herd is always wrong at these inflection points, and this time is no different. I've seen this exact setup play out dozens of times over my career, and it always ends the same way. The retail buyers get trapped, the institutions take their profits, and price drops another 5 to 10% before anyone realizes what happened. Let's pull back the chart and look at this from the top down, starting with the weekly time frame, because that's where the real trend lives. The weekly trend right now is a sell, and if you look at the moving averages, it's not even close. The 200-week moving average is sitting all the way up at 81373. That's almost 7,500 points above where we are right now. We've been below that level for weeks now, and that tells you the long-term trend has already shifted from bull to bear. The 100-week moving average? That's at 76531. We broke below that level almost 2 weeks ago, and we haven't been able to get back above it since. Then you have the 50-week moving average at 75899, and the 20-week at 75,928. Those two just crossed over to the downside. That's a death cross on the weekly chart. That's one of the most bearish signals you can get, and it's telling you that the medium-term trend is now firmly to the downside. That's not a small signal. That's a major shift that takes months to play out, and we are just at the start of it. Now move down to the daily chart, and it's even more clear. The daily trend is a strong sell. We've been making lower highs and lower lows for the past 2 weeks, and every single moving average on the daily chart is above current price. The 5-day moving average is at 74,142. That's exactly that resistance level I told you about earlier, the one that would reset the entire structure if we break it. The 10-day is at 74826, the 20-day at 75,928. All of these are acting as resistance now. Every time we try to bounce, we hit one of these levels and get rejected immediately. We tried to break above the 10-day earlier this week, and we got rejected so hard we dropped 2% in a single hour. That's how strong that resistance is right now. Now look at the momentum on the daily chart. The RSI on the daily is sitting at 38.294. That's neutral, but it's not oversold, not even close. That means there's still plenty of room for this to drop further before we get any real bounce from oversold conditions. A lot of traders see that RSI turning up a little bit and think we are getting a reversal, but that's just the short-term noise. The daily RSI was at this exact same level back in April, right before we dropped 8% in 3 days. And the MACD? It's at minus 1024.5. That's a negative number, and it's been trending down for weeks now. The daily MACD line is still below the signal line, and it's been trending down for 12 straight days now. That means the bearish momentum is still accelerating, even with this small bounce. The histogram is getting smaller, which is why some traders think we are getting a reversal, but that's just the momentum slowing down before the next leg down, not a reversal. We saw the exact same thing back in March, when we had a similar bounce. The MACD histogram got smaller, traders thought it was a reversal, and then it dropped another 10% in a week. Now move down to the 4-hour chart, and you can see that same bearish structure. The 4-hour trend is a sell. We had a bounce last night, but it was rejected right at the 20-period moving average on the 4-hour chart, exactly as we expected. We couldn't even get above that level. That's how weak the buyers are right now. Now look at the 1-hour chart. That's where all the retail traders are getting fooled. The 1-hour trend is a strong buy. The RSI is turning up. The MACD just crossed over to the positive side, and it looks like a perfect buying opportunity. But here's what most traders miss. That 1-hour bounce is happening on literally half the volume of the previous sell-off. The buyers just don't have the strength to push this thing higher. They're just absorbing the small amount of selling pressure that's easing up after the big drop we had earlier this week. This is a classic bear trap. The market pulls up a little bit to lure in the buyers, and then it drops again, taking all of them out. And let's not forget the funding rates. Right now, the funding rates on the perpetual futures are starting to turn negative. That means the shorts are paying the longs to hold their positions, which is a sign that the market is starting to price in more downside. That's another signal that the smart money is positioning for a drop, even as the retail traders are going long. We are also seeing signs of a liquidity grab below that 73,293 level. There's a huge cluster of stop losses below that support level, and the market loves to hunt those stops. That means once we break 73293, we are going to see a quick drop to grab that liquidity, which is exactly why our target 2 is all the way down at 72531. That's where that liquidity is sitting. Now, you already know Bitcoin is the risk asset shadow, right? It moves tick for tick with the S&P 500, and right now, we are seeing the exact same divergence there. The S&P had a small bounce overnight, but it's still in a downtrend, and the liquidity is being pulled out of risk assets across the board. That's why we are seeing this same pattern play out in Bitcoin, in stocks, in every single risk asset right now. It's not just Bitcoin. It's the entire market shifting to risk off, and Bitcoin is leading the way down. As the risk asset shadow, Bitcoin is moving exactly in line with the S&P 500 right now. The S&P had a 1% bounce overnight, but it's still below its 20-day moving average, and we are seeing the same breadth divergence there that we are seeing in Bitcoin. Less than 40% of S&P stocks are above their 20-day moving averages, which means this bounce is being driven by a handful of big names, not the broad market. That's exactly the same thing we are seeing in crypto, where Bitcoin is the only one bouncing, and the altcoins are still dropping, which tells you this is not a real risk-on move, it's just a short-term relief rally. Now, let's talk about the support and resistance levels that are going to matter over the next 24 hours. This is the level that separates winners from losers. If you get this wrong, you're going to get wiped out. To the upside, the first resistance is at 74,140. That's exactly the 5-day moving average we talked about. That's the first level we are going to hit if this bounce continues. If we can clear that, the next resistance is at 74621. That's the previous lower high we set earlier this week. That's the level that would confirm a higher high if we break it. But to the downside, the first support is at 73293. That's the low we set earlier today. That's the first line of defense. If we break that, the next support is all the way down at 72928. That's the low from yesterday. And if we break that, there's nothing stopping us from dropping all the way to 72531. That's the bottom of this range we've been stuck in for the past 48 hours. Now let's talk about the fundamentals that are driving this move, because this isn't just technicals. There's a huge fundamental shift happening right now that most traders are completely missing. Over the past 24 hours, we've seen Bitcoin stuck in that tight range between 72531 and 74257, that pre-breakout tension everyone is talking about. But what's really happening behind the scenes is that institutional money is leaving this market in droves. Yesterday, BlackRock, the largest asset manager in the world, offloaded $1.26 billion worth of their iShares Bitcoin Trust, IBIT, in a single block sale. That's not a small trade, that's a massive institutional position being liquidated, and that's not an isolated incident. Over the past 6 days, we've seen continuous outflows from the spot Bitcoin ETFs, totaling over $1.55 billion. That's the longest redemption streak we've seen all year, and it's telling you that the big institutions are getting out of Bitcoin right now, while the retail traders are getting in. The institutional positioning data from the CFTC shows that large speculators have cut their net long positions in Bitcoin futures by 22% over the past 2 weeks. That's the biggest drop we've seen since the FTX collapse, and it's telling you that the big money is getting out of their long positions and turning short. That's not a temporary repositioning, that's a full-on shift in sentiment, and it's going to have a huge impact on price over the next few weeks. For the month of May, the spot Bitcoin ETFs had a net outflow of $2.3 billion. That's the largest monthly outflow of 2026, and the steepest we've seen since November of last year. That reverses 2 consecutive months of inflows, and it's a clear sign that the institutional bid that was driving Bitcoin higher earlier this year is gone. Now, you have to understand what this means. Earlier this year, the spot ETFs were the engine that was pushing Bitcoin to that all-time high. Every day we had billions of dollars flowing in, pushing price higher and higher. But now, that engine is in reverse. Every day, we have billions of dollars flowing out, and that's going to push price lower and lower, unless something changes. Right now, the spot Bitcoin ETFs hold about 1.3 million Bitcoin. That's almost 6% of the circulating supply. But over the past 2 weeks, they've been selling off about 10,000 Bitcoin a day. That's a huge amount of supply hitting the market, and there just aren't enough buyers to absorb that right now. The retail traders are buying, but they're not buying enough to offset the institutional selling, which means price has to drop to find new buyers. Now, this isn't just about Bitcoin, either. We're seeing the same thing across all risk assets. The Fed is still holding rates high, inflation is still sticky, and the market is starting to price in that rates are going to stay higher for longer. That means the liquidity that was flooding into risk assets earlier this year is drying up, and that's hitting Bitcoin the hardest, because it's the most sensitive to liquidity changes. When the liquidity tap turns off, Bitcoin is the first one to drop, because it's the most speculative risk asset out there. Now, what does this mean for the next 1 to 2 weeks? Our directional lean is firmly to the downside. We expect this bear trap to trigger over the next 48 hours, and we see price dropping to test that 72,531 level, and potentially even break below it if the outflows continue. Now, the only thing that invalidates this entire view, if we get a 4-hour close above 74140. If we break that level, that means the sellers are done, that means the institutional outflows have stopped, and that means we could be looking at a reversal higher. But right now, the odds of that are less than 30%, based on the data we are seeing now. I want to hear from you. Do you think Bitcoin breaks 72,500 this week? Comment yes or no. I'm tracking consensus, and I'll share the results in tomorrow's video, so make sure you drop your answer right now. I've been doing this for 15 years, and the consensus view is almost always wrong, so I want to see exactly where the herd is positioned right now, so we can trade against it. Most people skip this section. That's exactly where the money is made. Keep watching. This is the part that's going to make you money. This is the exact plan you can implement tomorrow, no matter what your risk tolerance is. I've got 3 different strategies for you, one for conservative traders, one for standard active traders, and one for the aggressive traders who want to move fast. First up, the sniper, the conservative strategy. This is for traders who don't want to take any unnecessary risk, who want to wait for confirmation before they enter a trade. We are not going to chase this bounce, we are not going to guess if it breaks, we are going to wait for the break to confirm, and then we enter. The entry trigger here is a 1-hour close below 73293. That's that critical support level we talked about earlier. Once we break that level with a full 1-hour close, that confirms the bearish breakout, that tells us the sellers are in control, and that's when we enter our short position. The stop loss for this trade is at 73550. That's just above the high of the breakout candle. That way, if we get a fake out and price bounces back above that level, we get out with a small loss. The first take profit level is at 72928. That's the next support level. That's where we are going to take half our profit off the table. The second take profit is at 72531, that's the bottom of the range, that's where that liquidity is sitting, that's where we expect price to hit once we grab those stops. The risk reward on this trade is 1 minute and 3 seconds, which is a great R for a conservative trade. That means even if you're wrong half the time, you're still making money. And the invalidation for this entire setup? If we get a 4-hour candle close above 74,140, that means the entire bearish structure is gone, and we void this trade completely. Strategy 1: the sniper, conservative, entry, 73,293, 1H close below, stop loss, 73550 take profit 1, 72928 take profit 2, 72531 risk, reward, 1:3.0 R invalidation, void if 4H candle closes above 74140 next, the active trader, the standard strategy. This is for most of you, the traders who are actively watching the market, who want to get in earlier to get a better entry, but still manage your risk properly. This is the strategy one use most days. It's the perfect balance of risk and reward. For this setup, we are going to enter our short position as price rejects that resistance level at 74050. That's just below that 74,140 resistance we talked about. That's where we expect this bounce to top out. We've already seen price reject this level twice this week, and this bounce is going to do the exact same thing. The entry is when we see the first sign of rejection at that level. When the 15-minute candle starts to turn down, that's when we enter. The stop loss for this trade is at 74,200. That's just above the resistance level. That way, if we do break above that level, we get out immediately, no questions asked. The first take profit is at 73293. That's that support level. That's where we take half our profit off the table. Once we hit that first target, we move our stop loss to break even, and we put in a 100-point trailing stop, so we can let the rest of the position run as far as it can. The second take profit is at 72928, that's the next support, but if the drop accelerates, that trailing stop will let us capture even more profit. The risk reward on this trade is 1 minute and 7.5 seconds. That's an incredible RR, and it's all because we are entering at the top of the bounce, before the drop happens. The invalidation for this setup? If we get a daily close above 74,621, that means the bulls have taken control, and we void this trade. Type your Bitcoin range for tomorrow in the comments now. Let's see who's aligned. I want to see what levels you're watching, so we can compare notes, and see who's got the right read on this market. Drop your high and low for tomorrow right now. Let's see who's closest. Strategy 2: the active trader, standard, entry, 74,050, on rejection of resistance, stop loss, 74200 take profit 1, 73293 take profit 2, 72928 risk, reward, 1:7.5 R invalidation, void if daily close above 74621 trailing stop, 100-point trail after TP1 hit now, the last one. The aggressor, the high-risk strategy. This is for the traders who are already in the market, who want to move fast, who can handle a little more risk, and who can manage their positions aggressively. This is not for beginners. This is only for traders who know what they're doing, who can take a small loss and move on. For this setup, we are entering right now, at market price, 73871. We don't wait for the bounce to hit resistance, we don't wait for the breakout to confirm, we enter right now, because we know this bounce is going to fail, and we want to get in early to capture the full drop. The stop loss for this trade is tight, at 74140, that's that resistance level. If price breaks above that level in the next 2 hours, that means we were wrong, we get out immediately, no holding and hoping, no averaging down, we just take the small loss. And move on. The first take profit is at 73293, that's the first support, take half off there. The second take profit is at 72531, that's the full target, that's where we expect price to end up after the breakout. The risk reward on this trade is 1 minute and 5 seconds, which is great, but it's high risk because we are entering before we get any confirmation. That's why I'm telling you, only do this if you can lose small and manage risk aggressively. If you're the type of trader who holds on to losing positions hoping they'll come back, don't do this strategy, stick to the first two. This is only for the aggressive traders who can cut their losses fast. Strategy 3. The aggressor, high risk, entry, 73,871, market entry now, stop loss, 74140 take profit 1, 73293 take profit 2, 72531 risk, reward, 1:5.0 are invalidation, void if price breaks 74,140 in next 2 hours warning. Only for aggressive risk managers. Never risk more than 1 to 2% per trade. No positions through high-impact news. Stops are non-negotiable. This is how you survive to trade the next big move. I don't care how good the setup looks, if you risk more than 2% of your account on a single trade, you're going to blow up your account eventually. It's just a matter of time. Risk management is the most important part of trading. Don't ignore it. Now, let's wrap this up. The single most critical level for the next session is 73,293. That's the line in the sand. That's the level that decides everything. If we break that, we drop. If we hold that, we stay in. This range a little longer. Tomorrow's wildcard? The ETF flow data that's coming out tomorrow morning. If those outflows slow down, we could get a little bounce, but if they accelerate, we are going to see that drop happen even faster than we expected. That's what we are going to be watching tomorrow. That's the number that's going to move the market. If you want the full breakdown on gold and the dollar divergence, that video is live now. Tap the end screen. That video has the exact trade setup for gold, which is setting up a very similar bear trap right now. You don't want to miss it. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one. Next up, we are breaking down the exact trade setup for gold, so don't go anywhere. That video is next in the playlist.